Hundreds of thousands of Taiwan firms are leaving China. Policy decisions drive Taiwan investors out of China. On the morning of September 26, Taiwan manufacturers in Suzhou and Kunshan received a notice from the Jiangsu government informing them that power restrictions would begin at noon that day and they must stop production for 4 days. The province had taken the decision the previous evening at a meeting that ended at 2300. "We had not expected the government to act in such a drastic way," said a director of one of the manufacturers. A few days earlier, there had been rumors of power cuts, but not an order to shut down production. The cuts affected dozens of Taiwan companies in 10 provinces and sectors, including makers of electronics, auto parts, IT and raw materials. They came at the busiest production time of the year, fulfilling orders for Christmas and Chinese New Year. The cuts came after the closure of the educational cramming sector and the rectification of the property sector. "I do not know what Xi Jinping is thinking," said one Taiwan investor. "What I do know is that Taiwan investors can no longer survive in China." Hundreds of thousands of Taiwan firms are leaving China because of these sudden policy decisions, rising costs, and the intensifying trade and investment war between China and the US. Since the 1980s, Taiwan has been one of the largest foreign investors in the mainland, with approved investments of $191 billion. Among them was Foxconn, which set up its first factory in 1988. Its revenue grew to 97.8 billion new Taiwan dollars, $3.5 billion in 2001 and 5.3 trillion new Taiwan dollars in 2020. Annual investment from Taiwan to China has been declining every year since its peak in 2010. Driving it out are higher labor costs, stricter environmental requirements, fierce local competition, the need to avoid US tariffs on goods made in China, and Washington's demand to decouple its economy from China. Foxconn is investing $1 billion to expand a plant in India to meet the demand of Apple, one of its biggest customers, to move production of iPhones out of China. Since 2019, the Taiwan government has been offering preferential loans, land concession and tax breaks to companies that repatriate from the mainland to Taiwan. So far, more than 520 firms have done so, investing 792.5 billion new Taiwan dollars, according to figures from the Ministry of Economic Affairs, MOE. It is important for Taiwan companies to diversify their production bases now that China's business environment is riskier, said Emil Chang, chief executive of Invis Taiwan, part of the MOE.